Hey everybody, Real Estate Ninja here. I hope you are doing great. We're going to get fired up right now in the chat stream. And I thank you to everybody that subscribes to this channel. Hit the bell icon. We're going to talk about 2.2 million mortgage holders about to get smacked in the face with their greatest fear. We're going to talk about adjustable rate mortgages. I've also got some charts, really fancy charts for you. I'm preparing for this next course. I cannot wait to bring it out because I want to change the way you perceive real estate cycles, the psychology of real estate, both on the buy side and the sell side. But before we start, go crazy. Let's wake the algorithm up. All right, so first point is, I want to point this out. Type yes if you agree. And let's start with the story. All right, here we go. All right, now this story is about Canada, but I want you to understand this is what at the end I'm going to be going over the charts with, American numbers. But this story talks about Canadian mortgage holders, but it pertains 100% to what's going on in America. All right, 2.2 million mortgage holders will face interest rate shock in the next 2 years. It says Canada's housing agency is warning of a looming shock for borrowers renewing their mortgages as new analysis shows the pain of higher interest rates is starting to put pressure on some homeowners. I'm going to get this question, so I'm going to just answer it right now. People from Canada, Australia, all these different countries, they say, hey, is your real estate crash course pertinent to what is going on in my country? Yes, because it's like no other real estate crash course or no course ever. It talks about real estate cycles and what you could do to prepare for that right now. And just so you guys know, as of January 1st, I will never, ever, ever list it for this price. Matter of fact, the price will be going up well over 5x. I know it sounds crazy, but I wanted to help everyone equally for 1 year, and then I'm taking it to a much, much deeper, farther level. It says Canada Mortgage and Housing Corporation released its biannual report on the country's residential mortgage market. Oh, that's right. 80% off links are in the description. Sorry, I forgot that part. Market on Thursday. The analysis shows that more than 290,000 Canadians renewed their mortgages with a chartered bank in the first half of 2023, facing significantly higher interest rates and putting financial pressure on borrowers. Despite the higher debt servicing costs, CMHC noted that the mortgage delinquency rate in Canada is holding steady at the historically low rate of 0.15%. So you're like, come on, Ninja, it doesn't sound like a crash. We are way ahead of this. That's why we put out that course. That's why I wanted to get you ready now mentally and actually financially so that you can start identifying every step that I explain in the process of a real estate cycle as it goes down. It gets you even more pumped, gets you more fired up, and then you see these signs and then you'll know when to jump in. You know what's funny is it's just as hard to know when to dive in and commit when houses are falling off of a cliff price-wise and people are screaming and yelling and trying to get out of their real estate. That next step is coming. As a matter of fact, it's already begun, all right? And I thank you so much to everybody that helps me get this message out, because if we don't help people obtain real estate during this next crisis, that real estate that's being lost is going to go to the banks. It's going to make the banks bigger and even more too big to fail, all right? We need to get this brought to a normal level. We need the wealth of the nation and nations around the world held by the middle class. It says, but a deeper dive into those delinquency rates reveals signs of financial strain among homeowners. The proportion of mortgages in arrears, those behind in payments for loans valued at $400,000 or more, have been on the rise since the third quarter of 2022, the agency says. This trend, or the trend, is particularly visible among mortgages with $850,000 or more. This is what they said. With delinquency rates rising 3 basis points to 0.13% since that time, mortgages worth $400,000 or less are still showing delinquency rates above the higher value loans, though these metrics have held steady. They go on to say that they also said that the second quarter of 2023 recorded a notable year-over-year increase in the share of mortgages that have been in the arrears for more than 30 days. Outside the mortgage sector, the agency noted delinquencies on auto loans and other credit products have been increasing as well over the past 6 months. The decreasing ability for Canadians, and put your country there right now, it's going on all over the world. to make their debt payments is becoming a more significant vulnerability for the housing finance system, the report read. CMHC Chief Executive Romy Bowers told a House of Commons committee last week that she believes the risk of a spike in mortgage defaults is low. Now, let me just stop and remind, does anybody, type 1 if you remember this, Ben Bernanke, when he was head of the Federal Reserve, actually came out and said pretty much the exact same thing in 2005. That was when I was selling my houses. When the high ups are coming out once a month to quell the fears, and they're coming out and saying, it's not going to happen, everything's fine. That's like the inverse Kramer method of investing. When Kramer says the banks are fine, I think these are great deals, run for the hills, because 2 weeks later, the bank stocks are collapsing. All right. This is awesome that so it's just like Janet Yellen coming out and saying, we're never going to see a financial crisis like we did in 2008 again. Oh, okay. She obviously fast forward to spring of 2023 and she's already wrong. Okay. So you have to definitely take these with a grain of salt. I take it a little bit more than a grain of salt when the high ups are trying to tell you there's not a crash coming. It's because they're usually trying to sell you the stock that they're selling or the houses that they're trying to sell. But she says she believes the risk of a spike in mortgage defaults is low, provided the Canadian labor market doesn't see a significant jump in unemployment. Just so you know, type 2, if you understand what's going on, or if you're from Canada and you know they have a serious crisis with migrants. They actually have a very similar number of migrants coming into their country as we do, and they don't have the housing for it. It's very serious over there. Bank of Canada official warns more adjustment to come. Canadians are facing higher debt servicing costs, largely thanks to the Bank of Canada's rapid interest rate hikes that have seen the central bank's policy rate rise 4.75 percentage points since March of 2022. Rate hikes are designed to take demand out of the economy and tamp down inflation by raising the cost of borrowing. Well, this is where it gets really tricky and sticky for all governments and central banks. When they raise the prices of cost of borrowing money for homes, that's great. It slows down borrowing. But here's the problem. Eventually what happens, it moves through debt markets into companies. Companies see higher borrowing costs as well. They start laying people off. Now those people that are laid off, a lot of them have homes. What do they have to do? Well, if they can't make their mortgage payment and they have to sell to go to a cheaper area, then demand doesn't change because mortgage costs are still up there. Do you see what I'm saying right now? I'm going to show you some charts in a second that show this perfectly. And then what happens is inventory increases. Well, inventory is increasing. So all across the country, we're seeing price declines all across the country. I don't care what small town you're in, you could put it down below. It would take me about 30 seconds to get on realtor.com and show you on the first page of 10 homes, 2 or more have price decreases because they can't sell them. Okay. It doesn't matter where you are now. This is really happening. So that's the sticky part when they go, oh, we just raised rates to slow down the housing. Oh, cool. There's going to be after effects. Aftershocks. And this is why it's so valuable for you to put some money into your own education right now and learn this, because the money you put in now and learn this, you are going to save money hand over fist as this crash gets more intense. Simply by some standards, just not buying a house and just letting the price come to you. It says here, Rogers did not provide any hints into the Bank of Canada's next rate decision on December 6th. Her message to the crowd in Vancouver was that interest rates might stay higher in the long run. Oh, real quick, I canceled my Vancouver talk in January, so I'm not going to be coming to Vancouver if anyone was coming for that. Rogers warned that while there are signs the financial system is adjusting to higher rates, there is more adjustment to come. She noted that some 40% of mortgage borrowers have renewed into higher interest rates since 2022, and that by 2026, the remaining share of outstanding mortgages will also have gone through the renewal cycle. Depending on the path of interest rates, Rogers said these homeowners may face significantly higher payments. That is insane that she couldn't actually tell you the truth. Here's the facts. Canada's mortgage industry is so much more screwed up than ours in the fact that they force you to renew or refinance. It's a nice way of saying they're going to rob you more of every 5 years, I believe it is. Even for mortgage, just normal home mortgages, right? We're not talking commercial mortgages like they do in America. We're talking about home mortgages. So you are totally vulnerable to a rate increase. Well, this is the truth. In the next couple of years, 100% of the people that bought a home in the last 5 years in Canada are about to see a rate shock that they cannot afford. There's going to be a massive collapse in Canada. There's also going to be a massive collapse in America. All right. Canada's will be so much more profound because it is right now forcing people. See, the people in America that have 30-year fix, there's a lot of them that are refinancing into higher rates because they are doing debt consolidation. We know how screwed they are. Okay, I can tell you are screwed or you are a moron, sorry, if you had a 3% mortgage and just now refinanced to a cash out refi at 7.5. You're screwed. Okay, that is easy data for me to pick up. In Canada, it's going to affect everyone, even if they are good with their money, but they simply don't have enough to pay off their mortgage. They are forced to lose a 3% or 4% mortgage and refinance at a 6, 7, or 8% mortgage. Okay, this is very easy to pick up. See what I'm picking up? Pick up what I'm dropping off? All right, here, check this out. Now, let's get to some charts. This is really easy to figure out. Whoa, what time? I got a meeting. Don't want to miss a meeting. All right, here. This is real technical stuff. This is information out of the Federal Reserve of St. Louis. And yeah, St. Louis, fred.org. So this is 5/1 adjustable rate mortgages. Now you could see how they started going up back before the 2008 financial crisis because it was really simple. Rates were going up. The Federal Reserve was tightening lending. They were raising rates, the Fed funds rate. Then you could see it fall off a cliff as they pivoted going into the Great Recession. They started to actually pivot here and they dropped the rates. Look at what's been going on right here, 5/1 ARMs. Now, a lot of people would see this and say, oh, who cares about these, Ninja? Surely by the time, Canada's in trouble, but look at, by the time these go to renew 5 years from now, or 4 years from now, because this has been going on for, well, since beginning of 2022. This is January of 2022 when this thing took off, right? So you've got now, what, a a little over 3 year time clock. For sure, by 5 years, they're going to be down. There's the problem. They're not. You see, average mortgage rates in America sit between 7 and 9.5% during normal, healthy economies. But the last 23 years has been nothing healthy about it. There's been so much money printed in our system, it's insane, and now it's puking. And we can no longer print insane amounts of money, or we are printing it, but it not come back in the form of inflation and smack us in the face. And the rest of the world's currencies are going off the dollar standard, which means we as a government and as a people have to offer higher rates of return just for them, other countries, to hold our debt, okay? So you got to understand there's a lot of people that are not going to be able to refi. Now, this is what this chart doesn't show you, and this is not, this is a total bonus. 1 year, ARMs have become massive in the new home industry. And what happened is, in order to sell homes in the last 1 year, last year, home builders that were big enough that had their own banks or colluded with banks, and this isn't being recorded, it's being looked at right now you're going to see this come out in a year. They came out and they said, hey, just to get you in the house, we'll give you 5% 1 year just to get in. You can refinance at a lower rate if and when the Fed lowers rates. They should have put if in a really big capital letters. And you're going to see a bunch of people get smacked in the face 12 months after they bought their home, and they're going into their normal fixed rate of like 7.5%. So that's going to be massive. And those are not recorded because that's a deal between the home builder and the bank that they're working with. Okay. So that's very important. Another thing that you want to realize is, again, this is a chart from the St. Louis Fed of the Federal Reserve rate, the funds rate. Remember, it went up. Maximum pain right here, right? It went up here before the Great Recession. Maximum pain, maximum pain. Okay, when the Jerome Powell comes out and says, hey, you better get this out of your mind that we're going to be pivoting anytime in 2024. We are going to be higher for longer. That means it's going to be up here, higher for longer, higher for longer, higher for longer. This is what's really important about this. That's called maximum pain, and that's what you're about to experience. That's what about, and so if you're not prepared, seeing these trends ahead of time, because nobody explains what's going to come in the future based off of history. It blows me away. I guess it's not sexy and it doesn't sell books. Well, guess what? I got the greatest students in the country, in the world, and this is the last clarion call. By January 1st, those courses will never be that price again. As a matter of fact, they're going to be between 5 and 10 times the price. Why? Because I show people one way of making money is saving money. And when you know the signs and you can see it in real time, I teach you in real time, but also then in the future as news stories come out and data comes out and go, oh my gosh, it's just like he taught, because there's nothing new under the sun. I'm gonna hold and wait, and then all of a sudden I'm gonna strike. And the strike point is coming in the near future. When I say near future, it's between 1 year and 2 years away. But when that happens, and that's gonna be divulged to all of my students here with this next offer that I give them, you are only going to have about 1.5 to 2 years to take full advantage of this. This is what I went through when I bought my first house. Let me find it. Right there. Bought my first house when interest rate, the Fed funds rate was right here. And I had this much time. The good news is this time, based on all my previous knowledge and information, we're going to be able to hit it, and I'm going to show it to you right there. Giving a little bit of it away, but most people can't figure it out because nobody's teaching it. All right, with that being said, I'll put the 80% off discount links to the real estate crash course, what you could do right now, take actionable steps. Thank you so much for everyone for supporting me on this channel. This channel is exploding in growth, and it's because of you. Thank you so much. The Real Estate Ninja is out.